All right. So let's start with the charting session here. Okay, so here, let me just close that here. Okay. Perfect. Okay, so here, let's go back to the charts at the beginning of the day. Okay, so here was where we were during the silver bullet hour. Okay, so what happened here was that we closed above the previous high, okay, on the H1. But the thing is, I don't like when we sweep a big level of buy side like this, which was the previous daily high, and we also swept the previous weekly high here. So I don't like when we close above the previous candle, but we wick a big buy side liquidity level. So what do I mean by I don't like it? I just don't have the conviction that the next draw will be this high just by looking at the previous low. Okay, you always want previous high, previous H1 high. Okay, you always have to look to the left and see if you swept some sort of buy side liquidity and rejecting it. Okay, so here I was really sitting on my hands during this trade, during this hour, even though I knew there would be some probabilities that it would still go up. Okay, so I would still think that it will go up, because once you sweep a big area of liquidity like this, it tends to make a fake out, do a fake out, then resweep, and then make the real move. Okay, you always have like one fake move before it, just to engineer enough liquidity for the market to dump after. So here we could go on the 15-minute chart, and this is one of the models I like to play on the 15. Okay, here does not look like exactly how it looked in the market when we saw it, but okay, so here let me just see the weekly high. Okay, weekly high was this one. Okay, so here no trades for me. Okay, even on the 30-minute anything, just for the fact that once we swept this level, we did not close below it. Okay, once you close above a level like this, you don't want to be trying to short the market. Okay, buy side liquidity levels are super good support and resistance levels. So if you close above that buy side level, most of the time you will respect those liquidity pools and then make a new high. Okay, so here no trades for me. Okay, right there. Okay, what was happening is super important. Okay, I called out something on Discord, but I told you guys that here what I was looking for is always inside a range like this. I'm always looking for the last fair value gap in the whole range to get disrespected, in order for me to know that we're in the first stage of a buy program. Okay, which is my first stage of changing state of delivery. Okay, changing state of delivery. So here, okay, important thing. Okay, we had SMT at the low, so I did not need to sweep those lows in order to be bullish. Okay, these are not considered equal lows if there's SMT at this low. Okay, so there was an SMT. Okay, and what I said to Discord was super important here, and you guys, it's pure gold right there, is that you never want to be longing a market that high. Okay, if you want to be longing a market that high, which you can do easily, you need to have a balanced area, which means that you see all those fair value gaps, they're not tapped in yet. Okay, they're untouched. Okay, which means that these fair value gaps, okay, so if you create the model that I'm talking to you about, okay, the model that I'm talking to you about is this one. So sweep level sell side or have SMT at the low, push up, disrespect the last gap. Okay, once you disrespect the last gap, you know that every down move is just a manipulation. Okay, so here would be your down move. Okay, boom, hold those buyers, and then once you inverse that fair value gap and disrespect that bearish order block and create a bullish breaker, then you long and target those kind of equal highs. Okay, this is the model I keep talking to you guys about. Okay, but one thing that is super important about this model is you cannot try to play this model, okay, if you have a super big imbalanced zone like this. Okay, why? Because you could come back to discount of this range at any point. Okay, it's dumb to try to long here because most of the time it will be a fake out. Okay, what you really need to look at is 5 minute fair value gaps. Okay, those fair value gaps will tell you. So 5 minute fair value gaps are just you need to rely on higher time frame fair value gaps in order to sweep an external level of liquidity. Okay, most of the time you will not deliver from a 1 minute fair value gap here to target to break those highs if there is a 5 minute fair value gap created below. Okay, what will happen most of the time is it when you're trying to play this model, okay, is that you're going to sweep this low, tap this gap, okay, create your inversion breaker model, and this order block will hold. Why? Because there's a 5 minute fair value gap below, and if you're trying to target external buy side level or sell side level, you need to get delivered by a higher time frame fair value gap than the 1, 2, or 3 minute. Okay, so here what happened is exactly this, and this is why I did not want to take it. Is here, okay, you have kind of a sweep of a low, okay, boom, and this is your order block. Okay, you've closed below. This is a whole bearish order block. So if the market was to be bearish, okay, it would respect that zone, okay, and create a new low. Okay, but if you disrespect it, you have 3 confirmations here that you are bullish. So here you have an internal sweep which tells you you're bullish, the internal sell side liquidity sweep that tells you you're bullish. You have a delivery from a 1 minute fair value gap that is bullish, so it tells you that the market is bullish. You would disrespect the bearish order block, okay, so another confirmation that you're bullish. If you disrespect this gap here, this bearish fair value gap, it would also tell you that you're bullish. And if, yeah, so when you're disrespecting this, okay, you want to be looking at what you're respecting and what you're creating. So here, are you going to create a bullish fair value gap? Are you going to create bullish breakers? So all those are extra confirmation to tell you that the buy side liquidity level will get targeted. Okay, but look at what's happening here. Okay, so you have also an order block here. So you have 3 confirmations. You have the breaker, you have the inversion, and the order block. Okay, which is the A+ setup. This is an A+ inversion model if you only looking at the candlestick chart. Okay, the 1 minute chart. Okay, but you guys need to understand that this is pure knowledge that I'm giving you guys right there, is that you're probably not going to hit the high, okay, if you're not distributing from a fair value gap that is lower than 5 minute. Okay, you either need to tap in a 15, a 5, or a 30 minute in order to go sweep an external level of buy side. So right here, I'm going to show you exactly what happened here, is that if you are inside a big range like this, and this high is an external high, okay, if it does like this, the first move here, if you're not tapping into a 5 minute fair value gap, this order block will hold, create then the real sweep, and then the real move will happen. Okay, exactly like I said in another day, remember. But if you're not delivering in that exact case from a 5 minute fair value gap or a 15 or 30, the chances of this order block holding is super strong. Okay, so here would be your change in state of delivery. Okay, and then you needed to pull back to an M5 fair value gap. And you guys would probably say, oh my god, yeah, he's probably just making that shit up. Okay, let me just show you guys my models here. Document, oh shit, my fault. So here, just take a screenshot. Okay, my fault. Yeah, right there. Okay, these are things that I had since 6-7 months ago, so 8 months ago. So let me just see what is the one that I'm talking about. Let's look at this. Okay, so my third model, changing state of delivery, higher time frame, M5 distribution. you need to pull back to at least an M5 fair value gap in order to target external buy side liquidity. Okay, I am not lying to you guys. It will be a fake out. The 1 minute gap will be a fake out most of the time, and this is pure knowledge there. Take a screenshot of this, okay? But if you're inside a big range like this, okay, big range like this, and you're trying to target external, a 1 minute for value gap will probably not be enough to distribute all the way to this high, okay? You would need to sweep this low and then come back to discount of this range, okay, to tap that 5 minute fair value gap. This is exactly what happened here. Look at this. This order block will hold, and I knew it would hold, so I did not take the trade. I still said in the Discord that you could take this trade because this is still what I teach, but you need to understand that I did not take that just because I knew the fact that you needed to distribute from an M5 fair value gap, and there it was, okay, a discount of the range. And you'll see that yes, it dig way deeper, but ultimately gave you the real move after. Okay, so you'll see like we kept digging into those. Let me see if there was an entry here. Let me just see here. Yeah, there was. There could have been a scalp here at this exact moment, which is one of my ping pong scalp models. Okay, super important right there. So what happened here, we're holding a 1 minute fair value gap that is bullish. Okay, then we're pulling back here to this high, but we're not getting we're not respecting a bullish fair value gap. Okay, a bearish fair value gap, sorry. So then we end up disrespecting the last gap inside this range here, inside this swing high, swing low, which is my first stage in change in state of delivery. So every up move will be a manipulation. So here I pull back, respect the M15, and as soon as I get my order block and my inversion here, then you stab shorts at this exact area here once you inverse it. And this is some real inversion knowledge here. Okay, if you get that sweep, tap into that 15, and you already have had that first stage and change instead of delivery and made almost equal lows. Once you sweep this high and tap and respect a fair value gap on the 15 or the 5 or the 1, okay, and then you create this type of, so this model is exactly this one. Okay, so pull back here, boom, okay, okay, and I will show you. I have it also, okay, in my notes. So this is your change in state of delivery. Okay, first stage. So you know that market will draw towards these lows. So then you get a sweep. You hold this fair value gap here. Okay, hold this fair value gap here, and then you inverse this one with an order block, and boom, you'll have your shorts here and target those lows. Okay, and then you would bid it out. Okay, immediately here, this could be a nice scalp here. Okay, to the downside. Is there any questions here? I lost like 40-ish trades today, eventually just taking a CISD or shift on lower time frames. Never got more than a few ticks. I don't have any clue what to do anymore. Does the CISD last gap still apply if it swept the highs? Does the CISD of the last gap still apply if it swept the highs? No, not at all. Okay, if it sweeps the high, if it sweeps the high, you're bearish immediately. Okay, high sweep rejection is you're bearish immediately. Okay, so this could have been a trade here, but the thing is also with this trade is that still lower probability since you don't have S&T at this high. Okay, I don't like, the thing is, yes, you would have said that, all right, we held that 2 minute fair value gap, so we're still inside that range here. Okay, but the thing is, like how I play it, okay, is I really look at the 3 minutes and the 2 minutes. Okay, so So for example, here on the 3 minute, okay, you can see that we closed above we closed above this fair value gap here, okay. So once you kind of trade inside the wicks here, okay, you know that most of the time you will see these highs get swept, because market does not like to put in equal highs, okay. Like for example, this is the highs, this is the high. For example, you sweep the low. If it comes so close to the high and start digging down, okay, what will happen? The real information behind it is that people will start selling the double bottom, okay, double top, sorry. So here people, the retail people, will start selling the double top, okay. They will see this, oh my god, break, I'm here, I'm targeting there, okay. This is what they're gonna start doing, okay. But smart money algorithms, what's gonna happen, okay, once you disrespect that last gap, okay, you have that confirmation that you are close enough to that high, that this will be probably the draw. So what will happen is that the people that got squeezed from this inversion here, okay, the smart money, the real banks and institutions, they will cover their position. It's all about covering. So what will happen here is that dumb money will short this, and smart money will manipulate price towards the downside. So they will sell, as soon as they're back to their initial position, okay, here, then they will buy the market. Then they will go break even, okay. And if they go break even, if they sold their first, for example, they went short here, if they went short here, okay, and they had their stops there, okay, they have so much buying power and selling power that they can manipulate price towards their break even spot. And if they sold first and then they manipulate price to the downside to go break even, what are they going to click? Buy, okay. So if they click buy with an insane amount of contracts, price will just rally up, okay. But if it sweeps the high like this, you're just bearish, okay. It needs to like be a closure here and then a pullback to a 1 minute fair value gap if you're not targeting external, and a 5 minute fair value gap at least if you're targeting external, okay. Here was a pretty big chop. Let's see on the 30 minute if you had something, okay. What you could have played here just by looking at this is the 30 minute model that I have. It's the same thing as the H1. So you would just have your bias like this, boom, you sweep the low, you close back in the range, you know this high will get attacked. You scale back to a 1 minute chart, okay. This fair value gap or a fair value gap on the 30-second will probably lead me to this high here. So okay, so an insanely more advanced concept, okay, is trying to enter before the close of this candle, okay, 2 or 3 minutes before the close of this candle, knowing that there's no chances of 2 minutes, that 2 minutes will make this candle go black rather than green, okay. That will go for example, okay, this 30 minute, okay, for example, at 50, this was 58, okay, at 58 you knew for a fact that this candle would not turn bearish on the 30 minute in 1 minute, okay. And that's the thing though, this is an easy scalp if you start if you get really good with it. So you go back to the 30-second and you see that, okay, there's a liquidity pool right there, it's probably my 30 minute, okay. So you see a 30-second and you see a market structure, a break of structure right here, and you're holding a bullish fair value gap. That's your confirmation. You don't need more. So you get tapped in here, okay, and this is 59. So you entered 1 minute prematurely, and once it opens, you're already taking out your scalp here. So this is a 6.25 handle scalp, but it add up. Those add up, okay, and you will see that this will hold and then break the high after, okay. So here on the 30 minute, also what you could have done was look at this 30 minute candle, okay, but it swept the high immediately, so you wouldn't take that trade, sorry. So here, for example, same thing right there, exactly like I said. Here you could have taken a ping pong inversion, okay, ping pong inversion, which would have been this one, okay. So here you would tap Is that a 3-minute fair value gap here? No fair value gaps. Okay, there's no fair value gap. Okay, but what you could have said to yourself is that, you know, you see this high, okay, and it's the same exact concept. You have a high right there that is laying right there, okay, and you have all this chop. Okay, so you have a high right there on the 1 minute, but then you have all this chop, boom, 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 okay. And when the price comes so close to this high, okay, you just assume the fact that since you got so close to a high, the down move would be a manipulation if you start respecting those bullish fair value gaps and disrespecting those bearish fair value gaps and order blocks. Okay, so if you do this type of formation inside the chart, it's an easy scalp if you inverse this. Okay, so this could have been a nice inversion scalp model right there. So you would have held that gap right there. Sorry, would have held that gap right there. Boom. Go on the 2-minute chart. Nice inversion. What is this? An order block CISD also for extra confirmation. You would go long inside of there. Boom. And what I like to do on those type of single leg and like those type of inversions is that I like holding it. Okay, I like holding it for at least 1 to 2, or putting my stops to break even, since they are trades that tend to go a little bit further. Okay, so this was also a good trade that you could have taken easily. Okay, and if you guys can see also, which is super important, these are relatively equal highs. Okay, which means that these are highs that are made at the exact same area, and the algorithm refers back to those prices super often. Okay, if you see even those small equal highs on the 1 minute, it's super important. Okay, these are a target for sure. Okay, and the last trade you could have taken there, let me see, you go on the 30-minute chart, I remember. So here, okay, boom, you sweep the high, you close back in the range on the 30-minute, you know that this low will get fucked. So boom, you scale down to a 30-second, for example, and this is kind of aggressive, but it was 50, like it was 3:59. I'm not gonna lie, it's not that, it's not a good hour to go to take trades. But what I would have done probably is that I would have went in the 15 seconds. Okay, here, as soon as I get that inversion on the 15 second, and I know that for sure in 15 seconds there's no way this candle does not close bearish on the 30-minute, so I'll stab a short. Okay, pour RR, I don't care, because you know this trade will work, and you will do like this. Okay, boom, and you will sell and you'll hit TP. Okay, this is pure fucking edge right there. Okay, this is edge, this is a framework, this is a way to look at the market that will not lie to you. Okay, 30-minute H1, everything is fucking perfect. Okay, sorry for that. Yeah, so does anybody have a question? So the trade that you could have taken today was either this long was invalidated because you should have tapped that gap right there. Okay, you could have taken that short also right there on each change in state of delivery on the 2-minute. Okay, here would have been like the best possible area to enter the trade, since there was still a 1-minute gap here. Would have been like right there. Like, yeah, I would have taken the trade like either here at the 2-minute or here, and would have left right there. So some trades to take into consideration here. So 1, 2, and 3 trades. Okay, this is enough for you to make money and dip. Okay, and let me see if there was any 30-second models here. Not really. No, yeah, no 30-second model today. Yeah, I mean, once if there's a super high volatile news, oh, there we go. There we have it. Yeah, there we have it. And yeah, I thought I saw it happening. Yeah, so here is your 30-second model. You don't really have a fair value gap though, which makes it not A+. But let me see here. Yeah, it's not a really good 30-second model, because you would really like more accumulation than only like 5 or 10 minutes. Okay, I like when there's at least 4 5-minute bars. Okay, 5-minute candles. Okay, so what's up, Jimmy? So do you guys have any questions? These are pretty much the trades that I saw today. Not really, it was not really a good day, to be honest. The best setup that could have been was if we swept this low, tapped that 5-minute fair value gap, and did the same exact pattern, which is the inversion breaker and order block here. I would have ported an account on that. That's for sure. Okay, I'll blow an account any day on that type of trade. Okay, and I don't care. So plus, if you do have any questions regarding anything, like the models that you should take into like more into consideration, like which one should you like put your mind into. Shout out Slazy, shout out Rashka. So you guys ask your questions. This is really the best time to ask your questions for sure. Okay, anything. If like which videos you should look out. Yeah. So. These are really the trades I would have taken here. So here, sorry for that. We'll go here, boom. Yeah, you'll see it like this. I'll just, let me put it like this. SMT. I'll read your questions. Just wait. I'm taking a screenshot for the Discord. So this was the trading day. I'll show you. I'll write down that this is an M15 for value gap. So you guys see that the amount of skill you need sometimes to take a trade is that you really base your some trades off higher time frame John liquidity, and sometimes you need to enter prematurely. Okay, you just need to, in order to have the best possible entry and not have a screwed RR. Okay, kindly do the 1 hour model, 1 minute scalp. Kindly do the 1 hour model, 1 minute scalp. What do you mean, Rashka? Like, what do you want me to do right now, or explain? Of the 1 hour, 1 minute scalp. Okay, I'll do one. Tell me if you want an example. I'll show you one right now. So I'll just show the example. Fuck it, probably what you want still. So let me just find one on the chart. Okay, I know it happens every single day. So okay, so here for example, okay, it's a pretty good one here. So you sweep, what is this? Asian low, okay? So it's overnight lows, which is a super big liquidity pool, okay? You sweep it, okay? You close back in the range, but you're not immediately bullish, okay? You wait for that candle to close bullish. And as soon as you wait for that candle to close bullish, you know that this high will get attacked in the first few minutes of the hour, okay? We'll do this, then create some sort of market structure shift, and boom, you stab the long, okay? So then you scale back to a 1 minute chart, and you're gonna see that we're gonna open here in the next candle. Okay, so here you would open here in the next candle. Okay, so what happened there? I remember I took a loss on that because I really try to play it aggressive. Okay, I entered here. Okay, which is a super good entry. I'm not gonna lie. I'm laughing right now because I am a fucking degenerate for that. But I entered there, okay, which is super aggressive, but it's super good, okay. Most of the time in volatile markets, it will work. This is the only entry that you will have, okay. But I remember this was a Friday with no news during May, so I got cooked, okay. So what I did here is that I still knew this high would get taken, okay. Why? Because we swept this low, okay. My GG's. Yeah. This is what happened when you yap too much, bro. Let me. Yeah. Okay. So it unfroze when I close it. GG's. Alright, GG's. Stats check, everyone. Let me see. Okay. So boom. Yeah. So let's come back here. Okay. Remember, made good money on that day, but also lost the trade on that shop, luckily. But okay, so this is your H1 draw. Okay, well, how I mark it is that, okay, I go to the 1 hour, okay, and see what's happening with the liquidity. Swept Asian low, overnight low, close back in the range, waiting for that candle to close bullish. As soon as it close bullish, I know that we're gonna have a manipulation towards this high. Okay, even if the market wants to go down, it would still need this high in order to have enough fuel to go down. Okay, so what you do, you go back to a 1 minute chart. Okay, most of the time, if you have a singular fair value gap like this that is aligning with an order block, it will hold. That day it didn't, so I got packed up, okay, on this. But what you would do here is boom, okay, you have that kind of setup here, that you have that kind of order block, bearish order block put in, inversion, market structure shift. This is a market structure shift here. Okay, so you're holding this fair value gap here. Now remember, we had SMT at this low. Okay, we had SMT at this low for extra confluence. Okay, so here you're holding a fair value gap like this. You wait for that 2022 model, and you could definitely enter inside of this fair value gap here, or an inversion. Okay, so you could enter of that inversion here. So here, boom. Okay, what I would have done here was enter inside. I would have entered inside that fair value gap. I was already in though. Okay, so you can enter here once you close above the 2 minute gap. Okay, here, boom, and wait for a pullback after. Okay, so like here you could enter back here also. Why? Same model. Okay, there's only 2 models in the 1 minute that you can look for. Okay, it's either this one, okay, or this one. Okay, order block or breaker block. That's it. So here you could have entered up the inversion for 1 con, okay, of the 2 minute inversion for 1 con here, as soon as we pulled back to that area here, and you could have entered inside that 1 minute fair value gap aligned with that order block. Okay, and you could have also had an entry here, but you will not get picked up. Okay, most of the time you will not get picked up. So here what I did was that I wrote it all the way to this high, and look what happens. Okay, you take out your profits here at this high, but look what happens, guys. It needs to refer back to this point, even if market wants to go down, okay, or up. So here sweeps it back, does whatever the fuck they want, but we already took our trade. Okay, so do you understand how I play it? Yeah, exactly, Rashka, I got you. Got backed up, wait, but no. How do you know if it's a fake out or not? You don't. It's just, you have to have enough data to understand which model to take sometimes. Okay, so for example, when I have this reversal pattern, I know that most of the time a singular fair value gap will hold if it's aligned with an order block. Okay, but the thing is, low volume days will prevent you from that aggressive entry. Okay, but high volume days will give you that aggressive entry, and it will only give you that aggressive entry, and you need to have a feel of the market for it a little bit and have enough backtesting time. So for the new guys or the people who are watching, man, focus on the H1 draw liquidity and the 30 minute. Okay, if you can master this, you're making money easily in the market. Okay, easily, because time is fractal. If you can understand this on the 30 minute, then you can understand it on the 15 also. Okay, and there's plenty of trades to take like this. Okay, sweep the high, close back in the range bearish. This low is gonna get attacked. Boom. Okay, sweep the low, close back in the range. This high is gonna get attacked. Like, it's super easy. This is why I'm always looking at buys when I should be looking at buys, and I'm looking at shorts when I should be looking at shorts. Follow the higher time frame narrative. stop being stuck to the 1 minute, you're gonna get cooked, because it's just you will get lucky. This is it. You will get lucky, and sometime your luck will run off and you will lose. Okay. So ladies, yeah, I will give you more detail for sure, bro. Just DM me. You should really look at the videos that I have for free on my masterclass and my and all my live sessions and stuff. You'll understand everything. I know you're smart guys. So just if you put in enough time, it's really not hard concept. Okay, it's not even really ICT that much. Okay, it's really yeah. You rewatch it again. Take notes. If you have any questions, I'll definitely help you out. That's for sure. Okay, so plus EV, I know right now you're struggling with strategy hopping a little bit, or not having enough confidence to take on a trade. Man, please just focus on this, bro. Please. You don't know what you're missing out on. I must be in the manipulation every day. I follow the hourly, but it will just not hit it, and the next 1 or 2 hours will keep going against me until I'm out. I'm telling you, if you keep following the H1 and you understand why you lose on certain trades, and sometimes rather than following the H1 you follow the M30, you will always be on the good side of the market. Okay, and sometimes you understand when to enter a little bit prematurely. Man, there's so many, like, just tell yourself there's so many entries here that you could have gotten 5 handles, 10 handles out of it. Okay, there's no point of you losing a trade in a day if it's not like a mistake from your part. Okay, it should not be an edge mistake when you make a mistake. It should be like either an execution mistake or a premature execution mistake, or anything. Like, it should be like because of you that you lost the trade. For example, if it was a good trade, or sometimes you will just lose a trade because it's time for you to lose the trades, because losses are randomly just distributed in trading, you know, by the statistics. I'm from Canada, bruh. New Hampshire? Wait. Rashka, where are you from? Are you from Algeria? Morocco? Alright, so man, shout out to y'all, bro. Shout out to y'all. Plus EV, I'm telling you, man. Keep going. I'm telling you, you keep going with that H1 and M30. Jimmy also. Just keep going with that, and trust me, nobody fucking tell you about this. You'll always be in the good side of the market, okay? It's just a basic concept of the power of 3, but it's the easiest and most effective way of getting scalps in the market, and always be on the good side, okay? You'll probably ask why you're bullish for value gap did not hold. Man, just look at the M30. You're not in a bullish market. You're not you're not inside the higher time frame order flow, okay? So man, keep going, EV, Jimmy, with the 30-minute, 1 hour, and keep going, man. So thank you guys so much. Shout out to y'all. I'll end the session right there, post it on YouTube, and thank you guys for showing up and asking a question. No, I don't use daily bias for scalps. I use daily bias for like extra confluence if I want to hold the trade. Okay, but daily bias for me is my H1 and my H4. Okay, so yeah, this is what it is. Okay, thank you so much. I'm gonna do a live again tomorrow. Live sessions will not be there for forever at all. Okay, live trading is not something that like, there's way too much value in live trading, and it involves stress. I have stress, extra stress when I trade also in front of a live. So man, use it while I keep trading on live, okay, for free. So shout out to y'all. Thank you guys so much. My favorite model, H1 M30 draw liquidity. Easy, telling you. So yeah, thank you guys so much. Let's see you guys tomorrow in the live. Peace. Thank you so much.